in the case of businesses, are there instances where both place of effective management, or let me say the question as it is, where both place of management and place of incorporation tests fail? Now, I would say yes, you could be in those instances where they both fail, and therefore one may need to go and determine the tax residence of a business in another way. So here, I'm going to list just a few scenarios where this can happen. You have dual residence. So a company is incorporated in country A, but it might have its place of effective management in country B. Now, one must also go and understand, what does effective management mean? There are various practice notes available for various jurisdictions, and certain jurisdictions, let's just say the EU, or your typical European countries, have got a very specific way of looking at it, where many of the African countries have got a much more, let's say, simplistic, and some of them have, again, got certain onerous rules which you need to apply. And one has got to be very careful that you don't end up paying taxes in both jurisdictions. So, what is also important of double taxation is you could end up paying tax in both jurisdictions and you get the credit in the one later, but it's a working capital impact, and one needs to understand that as well. And then, per my example of earlier on Mauritius and South Africa, there is an example of what they call a tiebreaker rule, and there they use that to actually figure out and resolve the conflict between the two jurisdictions. So another thing to be taken into account is the ambiguous or fragmented management structure. And that could be where there's a decentralized management structure where key management decisions are made across multiple jurisdictions. And yeah, it might be difficult to determine a single place of effective management because no one location clearly holds the management's power or control. And in this scenario, neither the place of incorporation nor the place of effective management test can definitively determine the company's tax residence, leading to uncertainty. Now, there's a lot written on place of effective management, or POEM, as it's referred to, POEM, and one must clearly go and understand the rules regarding a country and how they interpret it, and then go and look at some of the case law as well in those jurisdictions. Now, inconsistent domestic laws also plays a role, and that's where one needs to go and look at what is meant by place of incorporation versus place of effective management. So country A may look at where board meetings are held or strategic decisions are taken, while country B would consider where the day-to-day operational management occurs. The tough thing of that, it could leave many countries wanting, and it could create a large amount of inconsistency, which makes it difficult for businesses to take decisions and leaves them in limbo. I say again, here I would strongly advise or recommend that you get tax advice if you are proposing to clients how to deal with this, or if you are the tax advisor, make a very thorough study of case law and what the rule of law is, the domestic legislation, and then any treaties that do exist between the countries on the table. International business structures are sometimes another way of looking at it, and they are many times very complex. And there one needs to go and look at the place of incorporation, which might not reflect where the business is effectively managed, like holding companies. And then you might go and look at the place of management, might be shared among various regions without a clear central location. Because herein lies the challenge. Place of management for a company is determined by many times by the board and the individuals involved. It's not determined just by the company, because the company's tax residence will first and foremost be determined by the country where it's registered, unless there's a very specific rule in the dispensation based in that country, like Mauritius, where they specifically say that you can create an authorized company, which is a legitimate company with shareholders, but they are not to be managed in Mauritius. And it's a very specific dispensation. And then one needs to go and make sure what those rules are, that you don't run into some issues there. Digital and virtual businesses is something that has popped up over the last few years. It's becoming more and more relevant. And yeah, it might be difficult to apply the place of management test, since management activities can occur online or in various locations. So the place of incorporation may also fail here, because the business legal entity is disconnected from where it's economically active. And you must go and carefully look at what has happened in those jurisdictions, specifically relating to that. So There's another way, and that's the tiebreaker rule. And those are tax treaties between countries which actually provide for this. And there's certain criteria that needs to be met in terms of this, insofar as it relates to the place of effective management, the place of incorporation, or mutual agreement between the competent authorities of the two jurisdictions. So I think it's quite important to be aware of this. Now, to resolve some of these issues, other than using the tiebreaker rule, one must also go and look at another concept which is well known in certain jurisdictions, which are mutual agreement procedures, and one must see these as dispute resolution mechanisms between two jurisdictions or more than two jurisdictions. But I say again, yeah, one must go and maybe just go and look at what's happened and what examples are there. And if it's something that does exist in a jurisdiction, although it exists in law internationally, it might be a total new concept and it's not catered for necessarily in a jurisdiction. And then you might run into an issue in implementing something that makes that work. So all of these points must be taken into account and considered when one needs to go and understand how you are going to implement your structuring from a legal point of view, and then also from a, where your corporate taxes are going to be paid.